Our next guest downgraded his own view in early February on a possible correction. 314 Research co-founder Warren Pies is here now for his view of these markets. So yet another one cuts its view. Where do we go from here?
Yeah, thank you for having me back. I'd say the good news is that I wouldn't be looking to reduce exposure at this point. I think there's a good chance you end up reducing closer to the lows than the tops at this point. However, I'm not looking to increase exposure either. I still think that we are in the middle of the risk window that we highlighted back, I think, when we talked a month or so ago, and that risk window extends out into April. The mantra that I've been kind of repeating for clients is that there's an old saying on Wall Street: the market will stop panicking when policymakers start panicking. And I think that's exactly where we're at right now. We're just waiting on some kind of policy response, either from the Fed or from the administration. I think that's going to be a little bit slow coming. And so, I don't think it's time to buy the dip just yet.
I mean, they keep telling you, the administration, that they're not so concerned about the daily gyrations of this stock market, at least to this point. There is no indication, despite prior history of, Trump 1.0, that the stock market today is near important to them as it was yesterday, so to speak, looking back to the first term.
Yeah, absolutely. I mean, that's exactly the point of we need policymakers to respond, I think, to set a bottom for the market ultimately. And I think out of the Trump administration, it's not coming. They've pretty much gotten on the same page. You hear Besant on CNBC here recently saying the market and economy is going to go through a detox period as we transition from public to private spending. And then you heard the press secretary today kind of say the same thing, and Trump also talking about that transition period. And that's kind of code for we should expect some volatility. And I think that investors who kind of latched on to the Trump 1 playbook need to really listen to that. And so that brings the Fed, I think, into the forefront. The Fed is coming in about 2 weeks. I think that the tariff uncertainty and everything, and maybe a little bit of politics thrown in there, has the Fed on this hawkish pause that we expected. This is kind of the exact recipe we saw that was going to potentially create a growth scare. And so, yeah, I think both wings of policymakers, the Trump administration and the Fed, are on the sideline for now. So, and then the other factor that we look at is that when you go into April, I think that's where the next leg could come from, the next leg down. That's where really some negative liquidity dynamics start to kick in, because you think back to last year, you had a huge bull market last year, S&P up 20%, gold up huge, crypto up huge. That creates a capital gains tax bill that comes due in April. Historically, those are really rough periods following bull markets. So it's kind of a perfect storm in our view.